After a strong move into the start of April, gold is now at a critical decision point. Price pushed up to $4,826, but today we're seeing aggressive selling come in the form of a bearish outside reversal. That raises the key question: was that the high of the week, and is this rally already failing? Last week, we flagged early signs that gold's uptrend was starting to weaken. If sellers reassert their control here, they could erase the entire move for the past few days. In today's gold technical analysis, we break down exactly what's happening. You'll see the higher time frame structure, the key levels that matter right now, what volatility is signaling, and the three scenarios that could play out next. Welcome back to Bitcoin Capital Gold, where we track Bitcoin, gold, and the US dollar to help you protect your capital and position before the next directional move. If you want that edge, consider subscribing. It is critical to understand market structure because it reveals the path of least resistance by mapping price movements, trends, and the balance between buyers and sellers. By looking at the higher time frames, we focus on the context, cutting out all the noise of individual bars. Starting with the yearly chart, gold's all-time high was set on 29th January 2026 at $5,627. That defines our ceiling. As we can see, the trend is in a strong uptrend with the swing direction also up. The last structural yearly swing low sits at $1,618 on 3rd November 2022. Until that level breaks, the yearly uptrend is structurally intact, and clearly nothing in the current price action is threatening that low. On the monthly chart, the trend is up, but the swing direction is down. The last monthly structural swing low was made on 14th November 2025 at $2,541. The monthly structure is intact. On the weekly chart, the trend is currently undecided, with the swing direction down. The prior structural low on 2nd February 2026 at $4,284 was broken, and a new weekly structural low was established at $4,100 on 23rd March 2026. On the daily chart, the picture is undecided. The trend is down, but the swing direction is now up. We're gauging if this rally has legs to move higher, or will it fail and die. Understanding price action is essential because it tells us the story of supply and demand to make decisions based on real-time market sentiment rather than lagging indicators. We have just ended March 2026, and the month of March produced a bearish engulfing reversal bar. The month started by pushing higher, taking out February's high and seller stops, making a high of $5,434 on 2nd March. The rest of the month, sellers were firmly in control, taking out the second structural February's low and making a new structural low on 23rd March at $4,100. Such a monthly reversal needs to be respected. April 2026 has just commenced. The daily swing structure last week was a clear pattern of lower highs and lower lows, a downtrend. When the market high at $4,601 was taken out on 25th March, $4,601, that changed the daily market structure. The change in the daily trend was confirmed by the two bars finding support on 26th March at 4,348 and 4,360 respectively, and then the 25th March high was exceeded. Until the 26th March low is taken out, the daily trend is up. The line in the sand remains at $4,000. We covered this level in detail in our previous gold analysis. You can watch that video using the link on screen or in the description. That level is not just a round number, it is structural. Fibonacci price zones in analyzing price charts gives us a huge advantage by creating a mathematical framework for understanding market psychology, human herd behavior, and natural market rhythms. Last week, we had three levels of resistance at $4,700, $4,900, and $5,400. The immediate Fibonacci zone between $4,674 and $4,683 has been broken, although, as we write, the price has returned below this zone. We now only have two Fibonacci resistance zones sitting between $4,856 and $4,863, and the higher zone between $5,361 and $5,385, anchored by the monthly high. The downside, Fibonacci support zones remain intact. That sits between $4,208 and $4,229. Volatility tells investors and traders about the speed and magnitude of price changes on any chart. It allows us to measure uncertainty, market sentiment, and direction. From the weekly perspective, ranges are typical, nothing unusual here. The monthly range has exceeded the January range, which paints a picture of expansion. When we look at the close to open, and it is the close to open, we see a directional bias to the downside. After 5 consecutive up months, March is currently showing a down close to open of negative $681. Expanding ranges combined with a negative close to open is not a neutral signal. It is the market telling us that the energy behind this move is building, and for now, that energy is pointing down. Markets don't exist in isolation. By layering the macro backdrop adds context so we understand how one or more markets could influence future price action. Crude oil is expanding. Currently, it is $112, having found support at $100. This is a strong move up, indicating that higher prices are on the cards. The US dollar index has found support at $99.29 and is currently sitting at $100. DXY also looks like pushing higher, indicating we may see money flow out of the equities market. The Nasdaq, after a brief rally to $24,348, are now pushing lower. Nasdaq is in a downtrend, and the low of 31st March at $22,961 is now in sight from the sellers. Bitcoin continues to work the range between $60,000 and $76,000. It has found resistance just above $69,200 and currently moving down. The Japanese 30-year bond yields did have a pullback for 2 days, but today has resumed its upward path. They are looking to exceed the current high. The USD JPY made a low at $158.274 and is looking to take out the high at $160.464, a dangerous level for Japan. There are conflicting political reports regarding the Iran war, with Trump saying they expect to pull out in the next few weeks, but on the flip side, there are reports that ground troops are being deployed. The markets are viewing this as bearish. We have looked at market structure, price action, and price zones, volatility, and correlated markets. Now we visualize how markets could play out. Scenario 1, buyers push higher. Yes, it's true, gold has been rallying since the end of last week, but today's outside bear reversal indicates the rally may be over. The Fibonacci zone of $4,900 still holds firm. Scenario 2, range continues. Price doesn't look like it will continue compressing, and a big move may be on the cards. For now, we're favoring that move to be on the downside. Scenario 3, support fails. The line of least resistance is still down. $4,200 is our Fibonacci support zone, and we need to see that tested for sellers to be in control. Let's bring this all together so we are clear on market structure, which price zones we should be focusing on, volatility, and how markets could play out this week. We are starting to see cracks in this strong bullish uptrend on gold. The recent rally was short-lived, and we are waiting to see sellers assert their dominance. The first sign will be a break below $4,348, which is the daily swing low, and then the $4,200 and $4,000 are the next downside targets. On the flip side, if buyers can resume their buying to $4,900, then that opens the way to reach $5,400. Volatility is expanding, and that expansion is on the downside. The macro picture presents strength in oil and the dollar, and weakness in the equities market, Japanese bond markets, and Japanese yen. Bitcoin still remains in a controlled range, with $6,000 being the pivotal point. For gold, the pivotal point is the $4,000 level. If you found this video useful, consider liking and subscribing so you don't miss tomorrow's video. What do you think of the levels we gave? Do you agree? Do you have your own levels you're watching? We'd love you to share your thoughts. Comment below so we can all discuss. At the heart of the new global financial economy will be Bitcoin and gold. If you want to be ahead of the curve, follow this channel.